Hello, hello, hello. What must I say? I'm so ready. Hello, hello, hello. Hello, everyone, and a happy financially lit Tuesday. We back at it again. Back at it again. Back at it again. Oh my God, back at it again. Hey, hey. So, I'm really trying to get this popping on the. Ay, ay, ay. Why am I struggling to find this share button? Okay, there we go. Okay, my bad, y'all. Um, wait, oh, okay. My bad, y'all. Excuse me for the delay. My bad. Okay, alright. We popping now. We popping now. Okay, okay, okay. All right, cool. So today I'll be talking about taxation. So I'm going to be talking about, what's taxed now, what's taxed later, what has tax advantages. Really, I just want to make sure that everybody understands because we get taxed on basically every single thing, right? I want to make sure we have a clear understanding of what are some tax advantages that we could take advantage of, like throughout the year. Like like you shouldn't only be thinking about taxes when tax season come around, right? So really making sure I pop back up and say, hey, we in September, right? Don't wait until January, February, whatever to start thinking about your taxes. Right now, let's go ahead and talk about some tax advantages, some things that are taxed now, some things that are taxed later, and how that can work in your favor. We're also going to go over the wealth formula, and I'm going to go ahead and drop in some financial tips, right? So, once again, happy to financially lit Tuesday. And yeah, let's get popping. So as you know, oh, and of course, if you have any questions along the way, feel free to ask. Like, y'all can just be having me talk over here without any interaction. So make sure you pop in, say hey, share with your friends as well. But let me know you're live with me, right? Uh, but yes. So as you know, like whenever you make money, you're taxed, right? You spend money, you're taxed. You save money, you're taxed. You die, they still tax you, right? So what can we do to make sure that we're ahead of the curve, where we're making sure we're aligning ourselves so that we're taxed less? Or, some tax advantages that we can take advantage of. Or maybe if we know that we're going to hit a lower tax bracket later, maybe we could defer some taxes to being paid later versus now. All that good stuff. Um, so I am looking at my notes here. So things that are taxed now. So this is heavy, of course. Hey Matt, of course, this is time for y'all to take notes. Look, whenever I'm on live, oh, let me say this. I'm already all over the place. Let me just take a little sip of water. Get it together. Mm. Hey, get it together a little bit. All right. So let me just say, over 80, almost 98% of the things that you don't write down, you forget within a day. Or is it over 80? One of them. And then over 98% within a week of the things that you don't write down. So it is crucial that you're writing your stuff down because over 90% of it, you're not going to remember it after today, right? So jot down notes, use your phone, do something, but make sure you're writing things down so you can have it in memory, right? Because we want to make sure that we're wealthing up. And we can't just be like, oh, Wadleen talks on here every Tuesday, whatever, go through life, right? No, we wealthing up for real. So let's get it. So things that are taxed now, right? Keep this in memory. I'm going to go over tax now, tax later, tax advantages. Tax now is things like your checking account. You're taxed on that now. Your savings account, CDs, so certificates of deposits. Certificate of deposits are really you saying, hey, bank person, could you save some money for me and give me a better interest rate versus having it saved in your savings account? Usually for certificate of deposits, it has to be like a certain amount, maybe 5,000, 10,000, but it caps at like a certain amount as well. So you can't put too much into a certificate of deposit. Hey, Brianna. You can't put too much into a certificate of deposit. Hey, Arthur. But you can go ahead and get that. That is an instrument, but it is taxed now. Also, stocks, mutual funds, those things are taxed now, right? Things that are taxed later. How can you take advantage of maybe things that are taxed now? Maybe if you're at a low income bracket now, and you could be like, hey, I'll go ahead and take the tax hit because if I wait until later to get taxed on it, then I know it's gonna be like, ooh, like I'm gonna have to get a hefty, bill or whatever. But tax now, usually because taxes tend to go up, right? Tax later. Things that are taxed later is your 401ks, your 403bs, your IRA plans, your self-employment IRAs, your annuities, your pension plans. So those types of retirement plans specifically are taxed later. So meaning when you go to pull them out, then they go ahead and say, hey, let's get some of that money in tax because you're about to go spend that money, right? This is so weird. I put my phone on do not disturb so that I can make sure I'm streaming to Instagram without being disturbed. But I don't know. I gotta check my do not disturb settings. But yes, so those things are taxed later. Um, and a lot it can work in your favor if you because people as they retire they tend to have a less income. So if you're like usually the working class, you're making more money, you're in your highlight the highs of your career, you're booming, you're getting that check, it's lit. And then when it's time to retire, you're at a lower income bracket. So sometimes that tax later has, so, kind of advantage for you as far as making sure that you're saving for retirement, right? Tax advantages. So these are things that are either taxed at a lower amount, tax now versus later, or things that aren't taxed at all. So you have your Roth IRA. So how the Roth IRA works, it's you're putting in money that has already been taxed. So when you go to pull it out at retirement, you're no longer taxed again. So this works in your favor because, like I said, usually when you get to retirement age, you're like the income goes down, right? So it's like, ooh, we're not popping anymore. Like, right? So it works in your favor to be like to not be taxed again while you're retiring because you need all your money. Like, who's trying to share with the IRS, right? The 529 college savings plan, which also changed. So now the college savings plan is not just for your traditional universities. They actually can be used for other means of higher education. So if you need information on any 529 college savings plans, education plans, savings for your kids, definitely reach out. I can give you more information about that. Um, so that has an advantage as well because that money's not taxed. If you're putting away and it has to be used for, those purposes, some guidelines, then you'll be able to not have to pay taxes on that amount. Municipal bonds, which is basically you saying, hey, government, I will take on your debt and you give me a return. So because you took on their debt, and you helped them, they said, "Hey, we're not going to tax you on that. Go ahead and do your thing," right? um, in simple terms. But also your health savings account. So your health savings account, or HSA, as you may know it as, um, those aren't taxed as well. So they can be. So like I say they can be because sometimes, like people go ahead and they just pour money into it because they think, hey, we lit, we're not going to be taxed on it. But up to a certain amount, 'cause there's always a gray area, right? In this beautiful country, there's always a gray area. So for the most part, you're not taxed on health savings account plans. Within certain guidelines, which the parameters are pretty wide, but they still exist. Just to put that out there. The other thing is life insurance, right? Look, y'all, I've talked about life insurance so many times. Again, of course, per usual, if you need any assistance with building out your life insurance, your protection for your assets, your family, yourself, definitely reach out. Whether you want a policy for cash accumulation, or if you want to make sure that you have a high death benefit in case of anything happening to you, definitely make sure that you reach out. Life insurance is another one with tax advantage. Long-term care benefits. Long-term care benefits. Oftentimes, you can buy long-term care benefits separately. Oftentimes, if you qualify for it, you can actually attach it to your life insurance policy, which is awesome. So how it works is, say you have a life insurance policy and the death benefit is $2 million, right? And you're like, okay, the death benefit is $2 million. A lot of times with at least for the company I'm with, and a lot of other brokers as well, you're able to, if anything were to happen to you where you need to cash out for your long-term care benefits, you're able to get 2% paid out to you of that death benefit amount every month, and your premiums stop. So there's advantages as like that. Also, with the long-term care benefit, if you don't know what that is, what it is basically if you need to pay for health expenses if you're unable to work or do 2 out of the 6 bodily functions. So that's like use the bathroom on your own, eat on your own, um, shower on your own, those things. So if you're not able to do it 2 out of the 6, then they say, okay, you're disabled and you're able to utilize the long-term care benefits. Also, if you're of like a certain age as well, if you're like super old, they're like, okay, and you're sick and all that good stuff, then you could utilize that as well. I know that was a lot of information as far as what's tax now, tax later, and tax advantage. If you didn't catch those, make sure that you go back into the video and really, soak those in because we're really trying to make sure that we're not overpaying taxes, right? We need to keep as much money as possible in our pockets so that we can wealth up. The other thing is capital gains. Oh, I did in fact, I would do a live specifically on capital gains because there's so many different ways as far as like you can decrease the amount of taxes being paid on capital gains. So I'm not even going to get into all that good stuff today. Um, all right. Did it again. Okay. All right. The other want to make sure I go over is the wealth formula. So what is the wealth formula, right? Like she said that she was gonna go over something called the wealth formula. Okay. So the wealth formula basically says if you put this together, it's gonna it's going to maximize your wealth because it's gonna tell you how much you actually bring it in and what exactly is going on as far as your money go. And then what changes you need to make because it's going to say, hey, like when you take into account inflation and all that good stuff, you need to get it together, right? So that's what it really shares. What the wealth formula, you want to make sure you write this down, is money plus time, plus or minus time, dependent because you have to account for the amount of time you're putting in. And I do this a lot as far as like when I'm helping my clients price their items because they don't account for the amount of time it takes them to do the service or create the product. Like you have to account for your time because like time is something that we're not getting back. Time is one of our most valuable assets outside of ourselves. So time, ourselves were the most valuable asset, right? And then we have time because we're not getting that back. So making sure that we account for time. And then our rate of return. So what is our rate of return that we're, receiving also off of that money? So we got our money, we gotta take, or we gotta add or subtract our time that we're putting in, or time that we're taking out, and then we have to put into our rate of return. So what kind of money that we're expecting back, and that could be like across the board. So you add up your rate of return on your savings accounts, your CD accounts, your whatever the case may be, whatever your investments are. Go ahead and add that together so you can get your rate of return minus inflation. So a lot of the times we don't account for inflation. Like money doesn't just like stay stagnant and is worth the same thing it was worth 5 years ago. Like the value of money definitely changes over time. And inflation accounts for that. And a lot of times, unfortunately, these companies aren't giving raises to account for inflation because inflation is 3%, and then you receive a 2% raise. Yeah, your money didn't even meet inflation. So we got to find other means of making sure that we're receiving that rate of return to increase our cash flow. And then we have to subtract for taxes. So if you're a W-2, then the taxes are taken out and you get your gross pay. I mean your net pay. But with any money that you receive, you want to make sure that you're removing the taxes, you're removing inflation, you're adding in that you're adding or subtracting that rate of return. If you're subtracting a rate of return, then that means it's a debt that you're paying out to, um, and then you get your wealth. So in total, wealth is money plus time, plus or minus your rate of return, minus inflation, minus your tax, which equals wealth. So if you're like, well, I'm in a negative, oh, it's not looking good, then you know that, hey, like I need to increase that money amount and then figure out other means on increasing like my rate of return and decreasing my debt so I can increase my rate of return, finding other means of increasing my rate of returns. Inflation is set, that's something we can't move, but also figuring out other means that you can decrease, avoid, or um, or receive tax credits or benefits, right? So as you look at your wealth formula that you so kindly wrote down, because we went over how much you forget within a day if you don't write stuff down, right? So you as you look at it, you realize how where you the areas you need to spend less and save more, the areas where you need to allocate money to and things as such, and where you need to invest your money. So I do want to touch on the interest, calculated interest, because I feel like it is absolutely important, and I want to make sure that everybody gets it and you have it in the back of your mind, really, when it comes to building your money. You ask like, hey, how can I make my money grow? How can I make my money work for me and without having to work so hard for money? And learning how interests work is the key. Without knowing how interests work and a budget, like there's no way. Like it's not gonna happen. Money's just gonna be going all over the place. You're not gonna understand how to really make money work for you without working so hard for money to come into your pocket. So stop trading time for money and really making sure that you're uh, taking advantage of the time that you have. Yeah, I know I'll be thirsty. Hold on. And if you're looking at my water jug, it's a little low today. I'm a little off. But yes. Oh. Ah, um, of course, I went over debt in the future. I mean, in the past, I went over different methods as far as decreasing your debt so that you can, which also goes into play as far as your wealth formula uh, goes. I do want to touch on the wealth hierarchy because we're on the topic of the wealth formula. And what better way to wealth up than the wealth hierarchy, right? So, the wealth hierarchy, I should have had a pamphlet on my desk. Um, I'm pulling that up right now. I need to that'd be so cool if I could like write and like draw out like some of these things. That'd be lit. So, the wealth hierarchy, which it originates or influences from the Maslow hierarchy of needs. That's really where I based off the wealth hierarchy. I'm realizing that a budget is going to be our next vital investment with Grand Med Financial. Absolutely, Arthur. Like a budget is really crucial. It really is because you really don't know what your money is doing. You can be like, hey, I have this set aside for these bills. I have this set aside going into savings. But then you realize how much miscellaneous expenses and things that you're just kind of letting your money do whatever it wants, where you can be allocating money into uh, more wealth, cash flow generating instruments. So, yes, a budget is absolutely crucial. There is not one wealthy person without a budget. You can't tell me that they don't have a budget. Like, it's essential. As far as all my wealth mentors, my business mentors go, my coaches, they all have one. They all say the same thing. I haven't had one that strayed me far, and I have four coaches, uh, and they all say the same thing. Okay, so the wealth hierarchy. Woo! First is level one is your physical, psychological needs, right? So we got to make sure our psyche is right because that is that's the start. If our psyche is all messed up, then we're not even going to reach the next step. We can't think about how we're going to protect our family and build wealth and live our best wealthy and healthy life if our psyche is not together, right? So making sure that psychologically we are affirming wealth and abundance into our lives. So proclaiming health and wealth in everything in our lives, making sure that we are speaking these words into us and not words of negativity and money is just for the rich or the rich is snobby or this other negative things or that is keeping us from receiving the abundance that is meant for us to receive, right? The next step is safety. Safety is really making sure that we have the right life and health protection for ourselves and our family, right? So we got to make sure that we have that safety net. We have to make sure that we have that safety net. Without it, we crumble. If anything happens to us, we crumble. If any of those like other steps go misplaced, at least we have a safety net. So we got to make sure that safety net is established because we don't want to be in a position where we lose. There's a loss of income and we're stuck. That is a very tough predicament to be in. So we want to make sure we have that safety net. So making sure that we have that backup savings plan, that life insurance plan, that health plan to account for anything that may. Life has a way of, look, I like to say God has a sense of humor because it's like those things that you're like, oh yeah, we're okay, do, 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 do. And you're like, oh shoot, and you get a test. Expect a test, right? As soon as you're like, oh, you know what? I'm not gonna drink meat. I'm not gonna drink alcohol for the entire month of September, right? The next day, it's like, hey, Wadley, you wanna go here? And then, oh yeah, drinks are on me. Nah, I can't drink. Yeah, I'm not drinking this month. It's like, it slaps you in the face. So expect the test. Expect a test. It will come, especially, we're on this wealth journey. Making sure that we have that safety net is crucial. Life and health protection for ourselves and our family. Step two. Three is our community. We cannot look. God did not create us to be like self-made by ourselves. We're social beings. We're meant to be go through life together, not alone. So making sure that we have a community behind us, we have accountability partners, coaches, professionals, our family, our friends, those that are going to help us push us along the way, right? Those when we feel like, oh my God, I don't want to do this, that remind us how great we are and why we want to do what we want to do. So why we want to wealth up. So making sure that we have those accountability partners, we have those coaches, we have those mentors in our lives, we have those professionals that's going to help us achieve what we want to achieve. The other is our esteem needs. So that is our planning and implementation phase. It's lit because this is when you get your hands dirty. You like, ooh, I'm on a grind. If you got to say, hey, look, from 7 to 9 o'clock, I don't want any distractions at all. I'm on my wealth up focusness time. Right? Whatever you need to do, this is your planning and implementation phase, whether however long it takes. And of course, as far as like this wealth hierarchy goes, it can be in different like business ventures or whatever in your life as well. So planning and implementation phase, all of these really it changes. So if you start a new business venture, you really start from step one and work your way back up because you still need that psychological affirmation for that company, making sure they're putting those positive missions and visions for the company. You need that safety net. You need those insurances put in place in case anything happens in the company. You need that team accountability, employees, whatever the case may be, to go ahead and get you out to your goal. And those esteem needs, the planning and implementation. So making sure that hey, we plan, we're gonna get the work done. It's on and pop in, right? And then our step five is our actualization phase, which is our ultimate healthy and wealthy lifestyle. Yay! So of course we're going to achieve it, and it's going to be a beautiful life. I do want to point out. I know I've been pointing out tips and things throughout the session, and we're gonna go ahead and we're gonna continue to do that throughout these lives, these weekly lives, making sure that I have different professionals come on with me as well over time. I do want to say that Grand Rev do have a new employee on board, so definitely excited for Jazzery to. Uh, introduce herself to you all as well. So that would definitely be exciting. And I do want to make sure that we understand the rule of 72 because that's going to kind of give us an idea of the interest rate. It's really 72 divided by the interest rate. And so that we can see about how long it will take that money to double. So whatever the case may be, whether it's 10%, if it's 10%, then it'll take 7.2 years for that money to double. And then keep going, right? Making sure that we are not jumping into investing prematurely because I meet so many people and they're like, hey, Wadleen, I've been working, I got a job, I'm doing fairly well, I'm ready to invest. And that is not the time to start investing, honestly. You still need to make sure that you have your debt managed, your emergency fund established, and then that investment, you're going to start building up that investment. Because if anything happens, then you deplete the investment, you don't have an emergency fund, you're more in debt, and you don't have any protection. So making sure we're building our wealth the right way on a solid foundation without just saying, hey, Wadlene, I'm making some money now, or hey, anyone in Grand Rev, I'm making some money now, I'm ready to invest. Where should I put my money? Making sure that we have those right protections and that manage the emergency fund, all that good stuff put in place so that we can be stress free when it comes to anything happening with the stock market. So we're not like, oh my gosh, no, I just lost $300,000, right? That we know that we have time to accumulate that money back or whatever the case may be. Because everything works in a circle. What comes around goes around. What goes up comes down and back up again. So that is it for today. Let me make sure I'm answering everybody's questions. Oh my gosh, I was just rambling. Naomi said taking notes. Okay, we lit. Um, okay. No questions here. Cool. Any questions, y'all? Let me know. Next week I will do an open Q&A. So whatever questions you had, come. And then I will be accepting direct messages all week long to see what questions y'all have, and I'll be answering everyone's questions on live. So next Tuesday would be devoted to Q&As. It'll just be a question to answer. Y'all just pop in, be like, hey, Wally, da, 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 da. Whatever you want to ask, I'll ask live and direct. But if I don't have any other questions, uh, Shopify marketing. All right. That's it. Until next week, y'all. Thank you for joining me. Yeah, I'll see y'all next time. We're financially lit. Also, if you haven't already, subscribe to Sipping Wealth YouTube channel. All the Financially Lit Tuesday lives are on there. Still haven't launched the podcast yet, but working on it. I finally got an assistant again, so it should help free up a lot of all this stuff that's been going on, the stress. So thank God I have her on board, and we'll introduce her on the Grand Web page soon. And thank you out there, and thank you all. I gotta find the end button. Okay.